November 2nd. Okay, let's start over. It's Wednesday, November 2nd, 2016. Thanks for joining me. This is another Trader Bite, a quick look at the markets before the day begins, a quick bite of information. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight stance of the market is towards safety. The market's allocating away from risk. Crude oil is dominating the downside, trading at 45.95, down 72 cents, 154 basis points this morning. Again, that's basically it's slipping on the fact that OPEC just can't get it together as far as controlling the supply side. This is followed by the DAX and the Euro stocks. The Nasdaq is actually flat to slightly up. It's up 2.5 points this morning, bucking the trend across all other index products that I'm watching. In the overnight, the key news has been the fact that the Mexican peso is getting hammered because of an anticipated or a stronger possibility of Trump winning. German manufacturing leads in Europe. The market manufacturing PMI for the Eurozone rose 52.6 versus in September versus to 53.5 in October, with Germany recording a 55.0 print. And then other than that, really, there's the big announcement today on the FOMC. Just so you know, the FOMC is announcing its latest policy decision at 2 p.m. Eastern today, and Bloomberg shows that the chance of an interest rate hike today is about 16.1%. 16.1%. The likelihood of a 25 basis point hike by the end of the year, which means next month, is around 68%. So not expecting the overwhelming probabilities for nothing today. And then of course ADP came in weaker this morning at 8:15 Eastern, trying to keep all times Eastern to avoid confusion for everybody. The ADP employment change came in at 147,000 versus 165,000 expected. The prior was revised higher to 154 from 154,202. That seems like an awfully big adjustment, but that's basically the news. Let's take a look at what we expected yesterday. Oops, looks like I just closed the wrong screen, the screen that I needed. Not good. Let me set that up for you here real quick. So let's take a look. So yesterday's hypotheses did not play out at all. This is your primary hypothesis right here. The expectation after Monday's trading inside of Friday is that we would likely tackle the low and then just sit steady as we wait out the FOMC decision. That clearly didn't happen. The market actually went into an OTD opening type yesterday, open test drive. There was definitely a driver in there. The secondary hypothesis is for a test higher and then sideways. And then the tertiary or the third hypothesis is actually for a reversal. And the reason for the reversal is the neutral day, the prior day. Sorry, that's the risk alarm. Somebody's in trouble. The prior day holding in neutral after a down day. The expectation is it would likely reverse after a neutral day up to 21.34. None of those played out yesterday. Yesterday went into a bit of a nosedive. A bit of a nosedive right off the open. Here's what yesterday looked like. A strong move lower. The opening swing yesterday was wider than normal. It's in the second standard deviation. At 6 points, it dropped from 25.50 to 19.50, pull back to VWAP at 22, and then rotating down through, and just unable to find any traction. You can see the entire day the market could not touch the mid or VWAP, and it just continued lower and lower and lower. We got to I pointed this out on Monday morning, the statistical low of the weekly range based on the prior week's close was 20.92. The market got to 91. I did post about that while it was happening, and I put it on Twitter. But the fact is, there was a statistical, and I pointed this out, that there's a statistical probability of a bounce around this area here, and it immediately pushed up 10.25 points, balanced for a while. It really spent a lot more time here than I expected. This consolidation zone, this zipper zone right here, uh, did trade a lot before it continued higher, and then we pushed right back to mid for the first time since the drop in the morning. We pushed back to mid and closed right outside of the IB, below the mid and against the point of control. So overall, yesterday was a classic trend day with a strong pullback. We did not close at the low. We did not shift we didn't shift the point of control to the low or something like that. So I did not expect a strong continuation lower overnight, and it looks like that held true as well, with the market testing down to 2094.50 and staying in between 2105 quarter and 2094.50 overnight. We closed the gap from way back from the July 8th NFP announcement. And we are holding here in the 2100 century figure, and we're likely to be holding steady here until the FOMC announcement this afternoon. That's the expectation. So looking at the bigger picture, here's what we've done on the weekly. We've basically continued to push this lower low, and we are starting to form somewhat of the beginnings of what looks like a trend channel. This is probably going to expand lower and shift down and then create a channel on a downtrend. So on the weekly, which is the intermediate term, we are in a drop. But looking at the bigger picture, this is my flex chart. We are still above the mid of this entire swing. So if we take the entire swing from down at 1975 all the way up to 2185, the mid is right at 2080. This area that we're stuck in right here, this is a low volume node that I talked about yesterday. This is an area that we've moved into and out of several times. We seem to trade very little here, or at least in the past we have. We seem to just get away from this area really quick. So it'll be interesting to watch and see what kind of action the higher time frames have on the open this morning. I'm watching very carefully. And then the next level down is 2080. And then we're going to start looking at the high volume nodes down at 2072.50, which I believe is the extent, which is likely to be the extent of this push down before rotation back up. So watching very carefully on the bigger time frame. The overnight session did not do much of anything. It opened nice and quiet. With the Asian session, it dropped, and then it immediately went into a consolidation here until the European session started, and then the European session took us higher and back up. So right now, what we have on the overnight is a very stocky, boxy profile, and the boxy profile tells us that there's no consensus on what value is currently. So this is how things are shaping up right now. And we're looking to continue to push lower to complete this move down, but it's highly dependent on what we get out of the FOMC today. So it's really important today to just uh, temper your expectations and let the market figure out what to do with the FOMC decision. There's going to be very particular attention to how things are worded and so on. We're opening in range, in value. Yesterday's value is somewhat valid here with the bulk of trading occurring near the downside. The market balanced enough here on a trend day. We generally have a lot of high volume nodes sprinkled all the way up and down the profile, but yesterday it did balance a fair amount. There was a lot of volume that occurred in a limited area, even though we have a double hump here, a camelback. The value area is fairly clear, which is unusual for a trend day. The cutoff on top on yesterday's based on yesterday's action, the highest resistance is likely to be in the 2110, 2111 area. I'm looking to be a seller right in this area on a retest. The expectation is for it to fight it out and then continue lower. So let's get into our hypotheses. On the open, after a trend day, we're looking for some balancing until the rate decision. The fact that we have news coming today shakes things up a little bit, but the expectations for an open auction again, and then I'm looking for it to respond back to 2106 and then chop around in here. And if it tries to go higher, it's likely to see resistance in that 2110 area, and then I'm looking for it to start shifting lower. That's the primary hypothesis before the number. Once the number comes out somewhere in the afternoon, all bets are off, and I'm going to go back and look at my hypotheses again based on how it responds to the number. The number usually unfolds in a three-wave move, and I'm trading it from that perspective. So that's the primary hypothesis. If we get a drop on the open and a push, we're likely to attempt to push the low and then turn back up and balance back into the FOMC, going into that number 2 o'clock Eastern. These are the two key expectations. What you need to know is uh, my plan is to be a seller above the point of control in the 2109 to 2111 area. And I'm looking to be a buyer right up against this 2094 and 2092 on a first retest this morning. So whatever hypothesis plays out, that's really what I'm looking for. I'm looking to trade from the outside in once the first move takes place. Okay, so I'm looking for it to revert, to attempt to push, expend that energy, and I'm looking for it to revert back, and that's basically the trade for today. I'm not looking for another trend day before the FOMC announcements. Basically, the bottom line. So that's all we've got. I want to make sure that everybody's kind of keeping their powder dry until the announcement. Just don't commit yourself too early, and then lose out on the chance to participate in some volatility that's likely to come with the announcement. Good luck today, and I'll catch you tomorrow. Take care.